You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Hello again. I'm Don. That's Tom, who can't get his headphones to go on properly. They're the same headphones that we've been using for years.
I know. It looked awkward, but it was awkward. But
wait, I gotta put my IFB thing.
Yeah, put that back in. So anyway, we're here.
All right.
The banter may continue. The blather never ends.
Never. Never ends. But we're glad to be here. And we want you to be here with us because we love answering your questions in between all the blather. All you need to do, the police are there again.
Yep.
All you need to do is call 855-935-TALK. That's 855-935-8255. You can call that during the show. We'll talk with you like a conversation when we're on from noon to 2 Pacific, 3 to 5 Eastern on Saturdays, or you can call anytime and leave your question electronically. And the reason you hear all those scanner noises is because Tom is in the newsroom.
Yeah,
This is where the news breaks.
Yeah, and I think next week they'll have me in the closet. They keep slowly inching me away from the studio. So I wouldn't be surprised, and I understand.
Tom, you see those big clear things over there through which you can see the Space Needle?
Exactly.
Can you just climb out there and just hang out there for a little bit, please?
One more step back. You know, one of the things we spend some time on the program talking about the things you should own. But one of the things a wise man once said, investing should be about the things you could eliminate owning, getting rid of certain things that you don't even have to consider. Now, last hour we talked with Rich about the variable annuity. I don't think you need a variable annuity ever. I really don't.
No. What? Do I need to talk about what purpose they don't serve?
No, because we want to turn to a different direction on this because there's been some things that have happened in the last couple of months that should clearly show you other types of investments you do not need to own, especially do not need to own in the part of your portfolio where you're trying to reduce the volatility, right? That's the bond part. A bond is an IOU. There's a suggested guarantee to all of that should provide less of a return, but also more stability when stocks that have no such guarantee are going up and down like crazy. And today, our friend Jason Zweig wrote about a thing called a floating rate security, right? That's one.
Yes. And the trick is, these are supposed to give you, as with most investments, they're supposed to be magical. They're supposed to take away the risk of rising rates so that they adjust up when rates go up.
Exactly.
And they and protect you on the downside. Well, 1 out of 2 ain't bad.
Yeah, and so here we are in 2020. According to Jason, the average floating rate security has lost about 12.5% of its value, which doesn't sound that bad, but that's about what the S&P 500 is down now. If you go back to 2008, the average floating rate fund down 30%. This is not the safe part of your portfolio. 30%?
Wait,
this is
that
not
sounds
the safe
like
part.
Stocks.
Yeah, an awful lot. And here's another part that people have been suggesting you buy because you're going to make a whole lot more money than just those boring U.S. government bonds. How about emerging markets bonds issued by those so safe countries like Brazil, Russia, India, China, places like that are issuing them at, no surprise, higher interest rates than the boring old U.S. government because, well, the boring old U.S. government's always giving you your money back.
They've tended to pay their debts on time.
Yeah. So I looked up
in full.
One of the largest, the PIMCO Emerging Market Bond Fund. That's down 11.6% year to date because it doesn't look like some of those issues. By the way, if you like that, I can get you into a terrific 99-year Argentinian bond.
Well,
if you're
that's
expecting to live a
long-term.
long time. No, I mean, so you shouldn't be expecting to make more, and you shouldn't be expecting to not face the music when things look tough, because places like this, and by the way, we can talk about the Vanguard high yield corporate bond fund. These are type of bonds we tell you do not own because they act like stocks. That's down over 8% year to date. Conversely, a nice intermediate term U.S. government bond, yeah, those are up 7.5% year to date because it looks like you're going to get paid back.
Right. But now just don't look at that number and say, oh, up 7.5%. I'm going to look forward to that in the
Get
future.
me some of those. No, the idea behind those is they hold their value when stocks go down. They give you your principal back when is so required, and you own them in a bond fund so that you're not necessarily all hinging on one particular tranche, if you will. Or I mean, they're buying new ones. They're getting the principal back. So again, the idea here, Don, was to talk about things we don't want you to own. You don't need emerging markets bonds. You don't need floating rate securities. And you certainly don't need corporate high yield junk bonds.
But Tom, I am on a fixed income, Tom, and I need a higher yield than the banks are offering, Tom, and I need it with a high degree of safety, Tom. Why can't I have that, Tom?
The reason you can't have it is because it doesn't exist. Sorry.
But it did in the 80s.
Well, yeah, because remember, inflation was running at like 15 to 18, whatever percent.
But this is the argument.
I know.
You hear it all the time. In fact, I heard it on the news the other day. With interest rates this far down, old seniors, American seniors are being cheated out of their income. No. There's no such thing as making a lot of money without risk.
Tom and Don are talking real money.
Hi, this is Don. Please listen carefully and respond honestly. Do you have an investment portfolio designed to weather market declines based on your personal volatility comfort zone? Odds are that you don't, because that's not how most financial advisors work. They make money by playing to your emotions. Sell that, buy this. At Vestory, our job is to know you, your needs, goals, and fears, and then help you build and manage your wealth in a way that allows you to sleep peacefully. Markets like these are why you need a 100% fiduciary advisor like Vestory. So before you do something you may regret, take a few minutes and talk to one of our Vestory advisors who are available by phone or video conference when you need them at 800-386-3004 or set up an appointment at Vestory.com. You have better things to do than worry about the market, so change the way you invest for your future for the better today at Vestory.com or call 800-386-3004. That's Vestory.com.
For your real life and real future, Tom and Don are talking real money.
And it's really important that something like this, a format like this, a program like this exists for you, because there aren't a lot of places where you can go that people will tell you the blunt truth about a very important part of the world's economy, and that is the financial part of it, because you need to know money, you need to understand money, you need to be a better investor, you need to know the reality of this before you can get to where you want to be, generally in retirement. So call us anytime at 855-935-TALK, 855-935-8255. I'm Don McDonald. That's Tom Cock. Show's called Talking Real Money, and guess what we talk about?
Well, and speaking of where you want to be, you know where I was supposed to be today, this very moment. If I hadn't been
in Florida.
COVID-19 out, I would be. Yeah. We were going to do the show together right there in that tiny little studio.
Actually, we had gotten preliminary approval to do the show live from Animal Kingdom in the park.
Right. Yeah, because they would let us in there free. They know us. Yeah. Okay.
Yeah.
Anyway.
Because there's the similarity between us and the rest of the animals. We were going to do it over by the gorillas, I think.
There was going to be hyenas. But anyway, so I was supposed to be there. And then I think on Monday, we were heading to Puerto Rico to meet parts of my family I've never met, which I guess now, I don't know I'll ever meet him, because that was kind of like a once in a life. I got a cousin who's like 80 something or I don't know. So
Yeah,
sorry about that, partner. I was looking forward to seeing you.
He was going to go see his grandfather's memorial or something.
Well, no, they have a square name for him. Yeah, they have a square name for him. Aristides Alcibiades Malbiscano. What a great name, huh? I mean, that is just why didn't you give me that name?
Hispanics have lots of names.
Yeah. So anyway, we're supposed to go see all that, meet the gang, and that's not happening.
This pasty face, white-haired man.
That's not white. Come on, that's blonde.
White-haired man would be like Puerto Rican.
Oh, come on. Yeah. I know.
Yeah.
I know. It doesn't work for you, but it does for others.
Do you have the little Puerto Rican flag off the rearview mirror? Oh, dude, you should get one of those. That would be so cool.
That's a good point. I think I will. Thank you.
Yeah. Get one of those.
How soon will Amazon deliver it? Is that considered essential delivery?
Of course.
There you go.
Puerto Rican flags? Yeah.
Big.
See?
That's all the blather I have for this week, so you better call.
All right. Well, give us a call, 855-935-TALK.
I got plenty more.
Part of the fault, really, if you, banter, part of the fault lies with you.
Exactly.
It's your fault.
Exactly.
If you don't call, we're going to banter. No, we're also going to talk about money issues. And one of the things we are talking about is things you do not need, investments you should not own. And by the way, I think I can confidently state that the vast majority of investment vehicles that are created in this world fall into that category of things you don't need, you shouldn't want, are probably bad for you, are certainly too expensive, and are gimmicks.
Well, I think Gene Fama said it best a few years ago. Gene Fama, of course, won a Nobel Prize. He says Wall Street comes up with like 5 or 10 of these new ideas every week. How the market really behaves, so I invest this way, et cetera, and said most of them, when you really test them, it doesn't hold up under long-term conditions. He believes there's really like 4 or 5 things you should pay attention to, in his words, that have sort of been developed over 50 years, a decade, I believe is what he said.
Yeah, and they're not even sure about the 5.
Yeah, exactly. I mean, they don't work every year. They don't work every 10 years, even in some cases. Over the long haul, they have, but not in the short haul. So, yeah, there's a lot of really bad products. Since you're going to ask, the Securities and Exchange Commission.
I don't think I asked.
The Securities and Exchange Commission just fined Wells Fargo $35 million.
Let me see if a caller asked. Hold on. No, nobody asked.
The $35 million over. Here's one you don't need: inverse exchange traded funds. Upside down exchange. No, I mean these are a product where you're betting against the stock market, which, by the way, in the month of March, terrific bet. But for the prior 10 years, a really bad. And they sold these to senior citizens and retirees with limited incomes. They put you in a product that was betting against the market. And so you're 100% hedged against the market going up. As I said, March, you look like a genius, but the 10 years before that, not so great.
Stock markets have, throughout time, risen in aggregate more than they've fallen. The value of equities, the economy, in other words, has increased steadily over time. It's a fool's bet to bet against the market unless you are 100% certain. Now, who's certain when they're gambling? 100% certain you know what the future will bring. And if, by the way, you are 100% certain you know what the future will bring, you're an illegal inside trader like some of our Congress people.
The Securities and Exchange Commission said some of the employees at Wells Fargo recommended complex instruments to retail investors who did not understand the risks involved. Really? You think so?
Did they give you the name of that fund? I'd just like to. Was it a Wells Fargo product?
Must have been. They don't have the ticker in here. No, sorry to say.
I'm going to find it. Let's see.
Wells Fargo Inverse Exchange Traded Funds.
All right. I'm going to find them.
Profit from a decline in the value of the underlying benchmark. Well, again, yes, you're saying the market will go down, and therefore I should be owning that anyway. It's staggering that I don't think it's a product anybody needs. But if you're a very sophisticated trader, I guess, of some kind, and you're looking at the market every day and you're doing this and this and this, that would be something you would use, but I wouldn't recommend it. No way.
Well, I got to tell you, here's the best solution. This has been my rule ever since I started talking about money on the radio back 32 years ago.
Oh, that all? Okay, because I just talked to somebody via Zoom meeting this week, and they said, I've been listening to Don since the 80s. I said, I'll make sure he knows it's the 1980s, not the 1880s.
1980s, late 1980s. What I've been telling all of my listeners since then is if the investment advice provider sits in or is affiliated with a bank or insurance company, don't go. Stay away. You're safer if you stay away. Bank brokers or insurance agents who sell investment products.
They are really salespeople.
That's all they are. They're high commissioned. They are, in almost every case, trained really well to sell, not trained really well in things like modern portfolio theory or asset class investing.
Doesn't matter.
They're salespeople and they're market timers. They're croupiers. That's really what they are.
Did you find the ETF or not?
No, there's so many articles about it. I'm going to keep looking though. There's so many articles about them getting in trouble with the SEC that's overwhelmed trying to search for the ticker symbol.
There's a surprise.
Yeah. All right. 855-935-TALK. That's our number. We have a lot of time. We'd love to help you deal with money better than you have been. Don't go away.
Tom and Don are talking real money.
Do you know what your investment risk tolerance is? Take our free no-obligation risk quiz at talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Welcome back to Talking Real Money. Tom Cock here, Don McDonald over there. You out there trying to figure out how to take care of your money, how to do better with it, how to not worry about it. So give us a call. We'll be happy to help you. 855-935-TALK. That is 855-935-8255. By the way, speaking of predictions, I will make a prediction. I will go out on a limb here.
Now you're scaring me.
I will say this with no doubt. This is going to be the year that I will lose the egg roll. I found out the other day my 12-year-old is now faster than I am.
Well, wait.
It's
Where are you doing an egg roll?
In the backyard.
Oh, at home.
Yeah, well, there's nowhere else to do it. I can't even have my grandkids over to do it this year.
I thought maybe you were going to the White House lawn or
something.
No.
I think they've already done it there, probably, no? Don't they do it earlier? Clue. Anyway.
No, they probably shouldn't.
That's probably true. You're right. Good point.
If they do, the president should wear a mask.
Which he said he will not do.
Did you see his wife? His wife's wearing them, though.
Oh, is that right?
She's getting pictures taken with the mask on. It's kind of like a little dig. It feels like.
It's
like,
she's more social.
Hey Donnie, look over here. Honey's got a mask on.
Careful about these things. Anyway, I will lose the egg roll this year. First time I think ever. So I'm going down hard.
I cannot find the Wells
Can't find
Fargo.
the inverse exchange traded
single.
fund. Single. So only 100%. I mean, you could buy, you could leverage it up.
3x.
Yeah, 3 times. So the market goes down. Woof, you really made it. Now,
I wonder
what
was the company that did that 3x inverse fund?
I think that's ProShares.
ProShares.
I think ProShares has a.
Now you said
like
it.
that.
I'm dying to see what it says. 3x daily inverse. There we go. Let's see. 3x daily inverse ETN. That's exchange.
There's another product I don't think you need.
Exchange traded notes? No, like you need a hole in the head. 3x inverse. I don't want silver. Oh, did you hear what Robert Kiyosaki, the investment he's recommending?
Other than his real estate plan that'll make you rich?
No, it's silver. Silver.
Oh, sure, because that's been a huge winner.
He's been saying for 10 years that silver is going to go to $6,000 an ounce.
Then what is it today?
Same as it was 10 years ago.
600. I don't know.
No, like $30, $20.
Oh yeah,
What is silver?
Sure, it's going to
No, silver's cheap.
6,000,
Silver's not gold.
Yeah. Okay. Yeah. Thank you.
That
for
and Bitcoin.
Who do you have? Oh, he just had his pal on. I'm forgetting his name. I can see his name now, but I can't.
I did
his
a
face.
podcast on it.
Yeah, who is
Harry
Dent? Oh, good Lord.
Harry.
Oh, the
Dent.
potato chip guy. Yeah, he's his demographic investing. He's basically been on the wrong side of every trade for like the last 20 years.
Oh
Seriously.
no, silver! I was so far off. Silver's $15.70 an ounce.
Oh yeah, well it's going right to 6,000. That's barely going up at all.
Yeah.
You couldn't find the ETF, so you can't even go buy it. You probably have to be
sure it's
a
there.
bank with Wells Fargo
well,
to own it.
I have another idea. Wells Fargo ETFs.
What did you type in
You
before?
just go ahead. I typed in the inverse one, but maybe I can find a list of them.
No, you probably have to work there. They're probably proprietary. You can't just go out and buy
Or
them.
that's what I'm thinking. Maybe it was somebody else's brand.
Yeah, it's hard to know, but yeah, I mean, apparently,
Because I don't think they have branded.
they're going to distribute some of the 35 million apparently back to people who lost a lot of money with that trade. Because
And all I see here, it says, why choose Wells Fargo advisors? Because they're going to charge you too much and give you bad advice. And so if you're a financial masochist, ladies and gentlemen, go to Wells Fargo. Apparently, they've been taking care of their customers for years.
it's just a matter of what taking care of means.
Oh, I'm sorry, taking customers for
it's just like,
years.
depends on that.
I added a word.
Oh.
All righty. We're going to take a break. We've got time. 855-935-TALK is our number, 855-935-8255. While we're in this break, maybe I can find that darned single inverse ETF. I'm going to keep looking, and please keep listening.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, talkingrealmoney.com.
Reality radio for a really great future. We're talking real money.
Welcome back to Talking Real Money. I'm Don. That's Tom. 855-935-TALK is our phone number. 855-935-8255. If you find yourself freaking out a little bit about the fact that the stock market turned volatile on you, well, welcome to the club. And give us a call. 855-935-8255. I still never found that single inverse ETF, but while I was looking, I was curious. I found a 3X Bear ETF. A 3X Bear ETF means you're betting 3 times that the market's going to go down. Okay? And this is what's really interesting. The 3X Bear ETF has been around for a while.
Who runs that? Is that ProShares?
That is Direction.
Okay. Oh, Direction. Okay.
Get this. This is so much fun. This will tell you why it's a bad idea to bet on the market falling, because that's what this fund does. It bets on a falling market, so you do well, supposedly, if the market goes down.
And 3X, you should do really well when it really goes down.
Well,
Yeah.
let's look, shall we?
Yeah.
2010, that fund was down 48.74%.
Okay, let's say you started with 100,000 beginning of the year. Now you're at 52. Yep.
Yep. Then in 2011, it went down 32.66%.
So now you're down another 3 times 5, another 6, 7,000. Okay, it starts adding up here after a while.
Oh, you wait. It's going to get more interesting. Wait, in 2012, it's down 42.75%.
You're not going to go to
You're gonna
zero,
wait.
but you're going down by a lot.
Then in 2013, it was down 60.7%. 60.7. 38 in 2014.
Wow.
Negative 38. Negative 18 in 2015. Negative 36 in 2016. Negative 44 in 2017. Ready? Positive 3.4 in 2018.
You had your up year. There you go, man. Boom.
That was it. But 2019,
Yeah.
you lost 56.
But this year,
And if you thought this year was going to bail your butt out,
yeah, a lot of bailing.
nope, down 9.8.
Oh, because things were good in the
How
first
do
month
you
and a half.
How do you do that?
This is a vehicle really it's probably traded minute by minute or something.
Since inception, its average annual return
I don't think you can call it a return. Yes.
is negative 44%.
What?
Annually.
Wow. How many years can you lose 44 and end up like at 1?
Pretty
Pretty fast.
3.
Yeah, I mean, it won't take long. It'll down.
I mean,
down.
the Morningstar chart that says growth of $10,000, it flatlined back in about 2016. That chart just flatlined. It's like you can't even see the number. It's so small.
All right.
So
Well, I'll tell you
small.
another thing. The show's been dedicated to things you don't need to own.
Things you don't need to
Yeah,
own.
I mean, we talked about
Yes.
emerging markets bonds. We talked about floating rate securities. Talked about high yield bonds. Another thing and I know people think this is investing because they grew up with the stock picking game, or they had parents who said, pick a couple of stocks that you really want to own. That's how you figure out how to invest. And people buy McDonald's, etc.
Yeah,
Another one you
I
don't
hate
need
that
to
game.
you don't need to own is individual stocks, because there's some great lessons, right? How about this one just like 10 days ago? The big challenger to Starbucks?
the coffee company in
Yeah.
China.
I mean,
Yeah.
they had to halt trading last week and the stock hit a little over $4. This is a stock that was trading at 51.
Wow.
I mean,
Yeah, but there's a really that one isn't just the market turned against them. We lied about our earnings. They
but
totally
this is when
lied.
you face this when you own an individual company, because things can happen. It's not going to happen to all 13,000 companies around the globe, but it does happen to individual. By the way, it's not the first time a company's lied about its earnings. There was a rather large energy firm, I think it was called Enron, where they
I've heard of them.
they had all that
MCI WorldCom.
Yeah,
They lied.
right. The guy just passed away.
Bernie Evers.
Just died not long ago. But I mean, there are firms where there's just outright fraud occurring. That's apparently what happened here. But if you owned it because you had to be in on the next hot thing, they're going to brew up some huge returns. Bad pun. But I mean, the point is, you don't need to do that to make money. You don't need to buy Microsoft in 1986 and sell it in 1999, or buy Amazon in 1998 and still hold it. I think Amazon's up still year to date. Somebody told me
yesterday.
yesterday.
It is.
Because they're
They're making so much money that they can tell their customers, sorry, we're gonna just abrogate our 2-day guarantee.
I noticed. I didn't get my stuff for my lawn. There's a model I'm waiting for. There's a whole bunch of stuff I'm waiting for. No,
And I called
We'll
them
get to
and I
you
said,
whenever.
wait, don't we get a refund? No.
Sorry.
I said, wait, wasn't there a deal? Well, no, not really. Did we actually? No, we didn't promise that. The guy actually said we didn't promise that. I
Oh,
said,
nice.
I think you did. 855-935-TALK. Jeff, are you listening? You guys abrogated the deal.
Tom and Don are talking real money.
Hi, Don here. Technology's allowed me to work remotely for the past decade. Heck, I even do this show from Florida. So at Vestory, we recognize the power of technology to provide information and guidance when you need it from anywhere, even from our advisors' homes to yours. When the markets seem to be rising, actually have risen, investing feels easy. It's times like these that separate the real investor from the players, and most advisors, well, they're players. At Vestory, we build portfolios for markets just like these and provide the ongoing counseling needed to remain disciplined through worrying times based on decades of scientific research, not seat-of-the-pants hunches or guesses. So if you're worried about your portfolio's future, you need a 100% fiduciary advisor like us to guide you through the troubled markets based on your needs, situation, and personality. Go ahead and set up your appointment with a Vestory advisor right now. Call 800-386-3004 or visit vestory.com, VESTORY.com.
For your real life and real future, Tom and Don are talking real money.
Okay, I blew up the chart for the Direction 3X Bear Fund.
yes.
$10,000 invested in it back in 2008.
Some 12 years ago.
They started it in 2008 because
Nice.
everybody
Of
wanted
course,
a
yeah,
bear
I
market
wanna
fund.
take- yeah, sure, take advantage of that.
So you're thinking, It's a bear market. I'm putting my money in a bear fund.
Absolutely. Yep.
You put $10,000 in that fund in November of 2008. The market was terrible then.
That was
didn't start going up.
The
until
bottom was in March of 2009. Yes.
Exactly. That $10,000 today,
Yeah.
$13.43.
No.
Yes.
You could see why Wells Fargo. Wow. Well, and this fine was only for the 1X.
Friend.
So imagine
this was a 3X.
What the fine's going to be on the 3X. Please don't use product like that.
855-935-TALK. That's our phone number here, 855-935-8255. And Ray, I think you're next. Welcome to Talking Real Money.
Hello, Ray.
Good afternoon, guys.
Hey.
Hey, question for you. I've met my son and daughter in their early 20s and looking to invest some money. And I've heard you guys talk about the World Index Fund through Vanguard. Is that a good way to go? And is that strictly stocks or just stocks and bonds mixed?
That is strictly stocks, but here's the reason if you're in your 20s, I don't know that you should own any bonds anyway.
Absolutely.
I mean, the reality is you're probably just costing yourself money at the other end. For anybody in their 20s, if they had earned income, which I hope they do, and I hope if they had it prior to all this, they're going to have it again. I would simply go a Roth IRA. You could do that at Vanguard and then just own the VT ETF or the VT WAX, WAX mutual fund. It is one mutual fund that holds 8,800 stocks globally. It does it at a very low cost. There's no commissions. And I would hope, I won't be around to see it for your son or daughter, but I would hope in 40 years when they retire, that fund might make an average of 10% a year. You imagine the power of that compounding? Wow.
That'd be, guys. So again, it was VTF.
No, VTWAX. Yeah, VT WAX. V is in victory, T is in Tom, and then wax, the word. Yeah. It's a great fund. It really is. It's just,
appreciate it, guys. And I appreciate the banter.
Oh, thanks, Ray. Appreciate the call. Ray. If you had invested $10,000 in the VTWAX,
you'd have more than $13.
That fund actually started in June of 2008.
Interesting timing. Wow.
It started in 2008. If you put $10,000 in then,
don't tell me. Wait a minute.
Your first year, though, you were down to $5,400.
Wow, you took a cruncher. So to get back into the 10, you need 100% return.
Well, you got back to the 10 by 2010. The end of 2010.
Wow, I can't even. What's it? 300 on that would be. Are you at 30,000?
No. You're too generous. It's at $17,530.
Okay, so almost 20.
VT WAX. So that's 175%.
Yeah, okay, that's right. Yeah, that's right. Okay.
Over that, but bear in mind that VT WAX didn't start until the peak. Really, the true top of the market.
Yeah, that's right.
In 2008, it didn't even get the advantage of having that beginning of the year to gain some. If it had started in January, it would be much higher than that because it would have had the beginning of the year to gain. So even then, terrible timing. You bought the market at its peak. You bought the global market at its peak.
What should you invest when the market's at a new record high?
Apparently.
That's always one of the questions. Now we don't have to hear that question for a while. I like that.
Yeah, we'll hear the question. We'll hear the question.
I thank you, Ray, for your call. I mean, getting young people, we had a call last week from somebody who said, well, you talk to 50% of the people that actually have something set aside or investing. What about the others? Well, if you can get your kids and grandkids started with just saving something, not spending everything. And then as soon as if you can't get a Roth IRA out of them in their teens, I get it. Kids, and you got other priorities. Hopefully education's in there somewhere. It might be a vehicle or something. Yeah, I understand all those things. Okay. But once they start working, you should make it mandatory for your kids that they are at least saving into their retirement plan at work. Most of them are going to, I think the average match is like 3%. They work for a company.
Absolutely. And
you
people
should do
forget
that.
that match. It's
I
free.
know.
That's
Right.
free. Take it.
Yeah.
It's free. But one of the problems is that kids don't think that they don't think about.
This is the part where if your kids are in your 20s, you might still have some influence over them. Maybe.
No. No.
Okay. All right. It was an idea.
My 25-year-old is living in our garage apartment.
Yeah, I heard her
No.
today. Nope, not happening, huh?
Yeah.
Okay.
No. You know what it is? It's still, I'm unemployed a little. She's not as fully employed as she was.
Yeah.
But I really need this.
Yeah,
And I
there's
really
a lot
need
of that. Yeah.
that. You know what she needs right now? This is ridiculous. Well, she backs off and she laughs. I don't really. She wants a Nintendo Switch.
I don't know what that is. That something you hit people with while they're
It's
playing a video game?
Yeah, exactly. That's what. Back in the 1800s, they used to beat their children with Nintendo Switches.
Okay, good.
No, this is a game.
Yeah, I guess that.
Console.
Yeah.
On which they can play a new version of Animal Crossing.
Yeah, I'm not a video game person.
We're not. We're old.
No, but there's still.
No.
We have one
No.
in our office now. A video
An old
game.
person who plays video games?
No, we have that too. We have the video game in our office. I told
That
you
is not even a video game.
Yeah,
that
it
is
is.
an old arcade game
But it's the
from
same-
when we were
what
kids.
would you call that?
Yeah, but
It's
we
a
were
video
kids
game.
when that
It's
came
video
out.
and it's a game. It's not outside playing basketball, right? It's a video game. I do
Okay,
like
Mr.
that game.
Literal.
Well, no. I asked you, what else would you call it?
Well,
There's
it's
nothing
not a
else to call it.
newfangled
No.
video game.
Oh, well, all right. Now you're going to add that in. But the point is, no, she does not need that. I agree.
No, she does not need that.
She could do something else with her time.
Oh, I did want to mention something because I just got a note during the show
Yeah.
from a guy in Minnesota, and I just responded.
Wow.
So if he's downloaded the app by now, maybe he's listening. Hi, Calvin. But I wanted to mention it on the podcast because I'm sure that's where he hears us. And he says, how can I listen to your live show on Saturdays?
Yeah.
I'm in Minnesota.
all you got to do is go to your whatever device and say, listen to Como Radio. Boom. Somebody in Idaho just told me this last week. No?
Yeah, okay. If you have one of those, like if you have a smart
come
speaker,
on. Yeah, all right. If you don't have one,
you
you're
say
right. Yeah,
you
that's
say
good.
listen to KOMO
Yeah.
radio
Yeah.
and it'll
Boom.
turn it on. But if you don't, if you have an iPhone or an Android phone or an iPad or a computer, download the TuneIn app.
Yeah, I've got
Get
that
the
on
free
mine.
version.
Mhm. Yeah.
Don't pay for the expensive version because you don't need that. It's
If I
free.
can do it, you can do it.
And then
Trust me.
you just type in the search thing KOMO.
It's right there.
And now you can listen to the show live.
Then
It's
you don't
really
have to
easy.
hear all the banter removed by the time they put it up for the podcast. And I also know the other thing to do about the podcast, they always take me out. Don ends up in there a lot more than I do. So listen to the live show if you want to hear more of me.
No, wait, I edit these podcasts.
Oh, that's why. I kind of wondered. No,
And I don't take you out. I actually improved your audio quality
Oh,
last week
thank
because
you,
you sounded
sir.
pretty bad. Because you're out in the studio. You sound different in the newsroom. 855-935-TALK. Call us.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Here's your traffic report. Oh, I see a car. Two cars out on the road right now. Oh, by the way, you should get a discount, a kickback or something from your insurance company. I just got 20% off. And I didn't even go to Geico. By the way, I just wanted to mention, if you need some help with money, if you need help building that portfolio, creating the plan you need, determining how much risk you need and can stand, getting the right portfolio for you personally, be sure to give us a call at our investment advisory firm, a 100% fiduciary firm called Vestory, Vestory. It's at vestory.com, or you can call us at 800-386-3004.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?